Hello, everyone. We are live, the Prospero.ai stock market live streams. Hope you all had a fantastic extended holiday weekend. We are at a different time today because George is actually in London this week, and we'll talk more about that. He's going to be speaking later today, which I will share a link in the chat in a moment, which you can click to watch him for free later. 2:15 Eastern Time. We have a ton of topics to speak about today since we only have one stream this week. Some about Elon Musk and his pay package, and his other company, not Tesla, SpaceX, just got a new valuation. We have a story about the Jaguar Type 00 EV car design that's looking pretty cool. We have Apple planning to launch a foldable phone. Can it reinvigorate their innovation? Something that we've been talking about how it's lacking for the better part of the Tim Cook era. We have another company kind of in a similar spot, maybe worse off even. Intel announcing that Pat Gelsinger, their CEO, was retiring immediately. So what does that mean for them in the AI and tech race that we've been seeing going on in the markets? We have some numbers from the Black Friday shopping last week, which topped last year's numbers. I was at the mall on Friday. It was an absolute chaos, madhouse. So I was expecting the numbers to be up the way the mall looked, but I think actually most of the numbers came from online. Then we have dollar stores across America struggling with the inflation we've seen over the past couple of years. Their stocks of Dollar Tree and Dollar General have not done well. Is there any future for these companies, or are they soon to be things of the past? Then we have the 24X National Stock Exchange looking to begin next year, and we'll give you some insights on the hours of operation for them and if that's a good thing or a bad thing for retail investors. Then we have two more topics before we get into the model portfolio at the end of the stream. We have GE Vernova, which is a spinoff from General Electric Energy business, reporting that they are now ready to dive into the nuclear energy industry. They gave some numbers, and it might take a little bit longer than you think for them to actually get up and running in this area of the market. So we'll discuss if that's good or bad news for the more high growth, lower profitability stocks we've seen in the nuclear space that have done well recently. And last but not least, we have the box office hitting records over the weekend. It was a trio of movies that propelled it higher, but I can't wait to get into all of that later. And I'm sure AMC will come up during that segment, so it's sure to be a fiery one. But George, let's start today with what you've got going on in Finimize, and you're overseas. So what time is it for you? 2 p.m., 3 p.m.?
What time is it? Yeah, it's 3. I think I might have done a decent job of getting adjusted this time. Who knows? But yeah, excited at this conference last year. Really love the people at Finimize. It's going to be a very interesting panel today. Doing it with the head of eToro US. So we're coming at retail investing from a very different angle, but I think they're doing some interesting things, and it's going to be cool to share the virtual stage.
Yeah, so I'm gonna try to get the link that you shared on LinkedIn, and I'm gonna put it in the
Oh,
chat in
I
a
owe that.
moment.
I owe that link. I will get it.
You have it handy? Okay, so we'll do that for all of our viewers who love our stream. You'll be able to see George speak later today, and it is free, so no reason not to. Do you have the topics that are you bringing the topics, or were you approached with the topics from Finimize? How did that?
Just a lot of different things about like AI and how to use it.
Okay, cool. So that's going to be something to look out for later
For
today.
retail investing. Yeah, the different ways, like how to validate different technologies. A lot of the stuff that you hear, that you hear every day here, and you can come and ask me. But it'll be a little bit. I'll be wearing a suit jacket jacket. It's like one of the only, well, I guess it's just a jacket, blazer. But yeah, I'll be a little more dressed up than normal at the very least.
Yeah. Uh, so look out for that, everyone. I'm sure I'll be watching later on. And since we only have one stream this week, I know all of our viewers are so disappointed. I have so many topics to talk about today. So let's just dive right in. But you know what? Let's, before we get into topics I was going to bring up, let's just get your thoughts on the market. We saw the melt up kind of continue. There's very light volume during these holiday stretches. So I saw a lot of the smaller cap stocks that seem to move up, like make big moves, maybe on the low volume. But you feeling the melt up for the end of the year still?
Yeah, I mean, I think everything we kind of have been expecting is still at play, right? I think we have, I think we have every expectation. There's the Santa rally coming, so you know, is very traditionally, about 80% of the time, something that makes the market go up in December. Um, and then we have, kind of general bullishness about, Trump winning and some of the specific things that we like, Tesla, Coinbase, things like that. But then, you have the other side, like we're talking about, I think, uncertainty, because I think some of the cabinet choices, some of the things that he's saying, in terms of tariffs, they could have big impacts on the economy. And it's one of those things that if there were policy right now, I don't think they would be adding the same kind of market. And when people don't know how to price things, where an uncertainty in general is hard to price, it kind of is a weight on the market. So I do think there's a weight the other way, and that's what we're seeing. And then, I mean, some of it is just like we're going to see natural corrections. There was like a really nice run for a few weeks, and we're going to see it bounce back. However much this is just like a standard correction from momentum or general fear around, potential policy decisions, we don't know, right? That's always really hard to tell. Obviously, if we see a few more weeks of this, I would say it's more, especially, I would say it's nervous around, what is the policy going to be? Who is it exactly going to impact? I think we saw, especially with healthcare and RFK, I think that is the most certain area where we definitely saw, while other stocks were rallying, some of those stocks were getting hit, the bio taking hit. Um, so I think that that's definitely something uh, to keep an eye on in terms of, is this just a correction from, a very clear bull move when after the election, or are we seeing something that is perhaps a little more uncertainty around it? And even then, I think, once those policies are cleared up, it looks like we're likely to resume the bull activity, especially in the areas that we're betting on and will probably continue to bet on, like Tesla and Coinbase.
Yeah, and there was some news about the Tesla CEO just came out, Elon Musk. So earlier this year, I thought this pay package, had been resolved and it was approved, but I guess that was just by Tesla shareholders and people within the company again, because a judge has denied it from going through. And I thought an interesting stat now is, we're 6 years from when this first got introduced in 2018. If it had been approved back then, the $56 billion would be worth about 101 billion today. So, are they gonna?
And that's
What
just with
is?
inflation, right? That's not even like what he could have invested it and made
Yeah.
potentially.
So,
The value of Tesla stock.
what is like? How many times can you try to get this to go through before? I mean, are they gonna give it up and just quit, or what's the future outcome from this?
Well, I mean, I think, especially with a friendly administration to him, to try at least one more time, right? Um, I think that that is definitely something to keep an eye out for. Um, but but yeah, I think that you could probably pull up a clip of me saying, pretty much exactly this, that it's rare for people to keep challenging, courts like this versus, just kind of adjust their tact or things like that. So it's pretty gutsy, and Elon Musk continually shows that he is going to do what he's going to do. But I think your point is an interesting one. could he have adjusted things and just gotten a pay package that was almost as high as this by now? And it'll be interesting to see, because people kind of say that the judicial branch is independent and blah, blah, blah. But it's going to be some pretty concrete evidence if this gets turned down a few times, and then with Trump president, that it passes. Now, it's fair to say the other side, maybe it shouldn't have been rejected in the first place. That would sort of say, well, it might have been twisted in the other way. Like, the judicial branch is something that's not supposed to, like, move with the wind or move with administrations. So even without calling anyone out, right, it does undermine the kind of impartiality that the judicial branch is going to have if he just kind of keeps hammering away at this and it works when Trump is president. So that's going to be an interesting thing to watch closely. And I mean, it's one of those things that we are going to have it's such an interesting time for security of the things coming. Because we're clearly going to have a very pro blockchain cryptocurrency government coming in. So what we might see is just a much more hands-off, SEC, judicial branch. And I'm bringing this up because anytime we've ever seen that, right, it's had pretty bad results for, the economy, the American people. So I think we should watch out for that, like, deregulation. And just so people that I am always trying to be fair, some of the most famous deregulation in my mind, and one of the biggest things that caused the mortgage crisis, was the repeal of Glass-Steagall, which was done by the Clinton administration, which basically allowed banks to bet personal funds when they were banned since the Great Depression from doing that. And there was really no good reason ever put forth that Glass-Steagall was repealed. That being said, we're entering a period of deregulation, and we've seen financial stocks going up. So I think we should all understand that there are other sides to these things, right? I think deregulation is always sounds nice in theory when it's benefiting your causes or things like that, or when the economy is going up. But I hope everybody has a long enough memory to remember and look back and maybe say, hey, these are things that we can do here if we kind of see the bad results of deregulation again.
Well, if you're thinking about deregulation comes true in the next year with Doge, it's going to be a very interesting year as Elon and Vivek lead that charge forward. I wanted to speak about another Elon company because SpaceX just announced a tender offer with a valuation at $350 billion, and that's up from $210 billion just earlier this year, so almost 50% higher in under a year's time. We've been covering how good these space companies look in our signals and how these stocks have moved. Some of the smaller ones like ASTS and Rocket Lab and GSAT is another one we just saw. Maybe this valuation increase from SpaceX kind of legitimizes what we've been seeing in our signals and how the overall sector is looking so bullish recently.
I mean, I think it's one of those things that there might not be, and we have a segment against another thing that might not be there yet in the profitability, right? But there's always a few different things at play. And it's funny because you see people talk about out of both sides of their mouth like this sometimes. You see profitability. But, a lot of these companies, any company that's heavy on R&D is going to have like a long path to being a highly profitable company. But, I think space is one of those things that there's always investment, right? People are counting on. And I think, ASTS is kind of one of the most like overvalued companies. If you look at it, it's actually above, when I was doing the analysis, I saw it above DJT in terms of revenue to, enterprise value. Granted, that's because they don't, you know, don't have any real products launched yet. But it is also like an interesting comparison. But you can see they're closer to market than a lot of these, say, like companies that might be more focused on, say space tourism or focused on, thing buying more rockets or governments buying more rockets or more exploration missions being funded. But I think it's one of those technologies, right? It's very different than if you're looking at some other things, right? Because, like, I think a really metaverse, right? And what Meta was doing in the metaverse, right? They started to spend a ton of money and then went like, oh shit, this is not there yet, right? And they basically like pulled the plug, right? Because it's very different and it's different like people actually or when exactly we see a future for like for the metaverse, right? But this future with like space tourism and more missions being funded, right? And just, wanting to run more tests, learn about it, develop the equipment. That's something that like everyone is like very tangibly interested in today, even though the technology might not be until tomorrow that, a lot of it can do it. And that's the big difference, right? It's like people aren't that interested in the metaverse today, or they were to a point of like voting with. But I think that's also a very interesting thing when you talk about the difference between governments and companies and people or whatever, right? If governments were very interested in the metaverse being funded, I'm sure it would have gone in a very different direction. And that's kind of where, space technology is, where there's a lot of governments. You can always count on government spending. And then there's just like, and then there's the thing that we talk about, like, whether it's like Bezos or any of these people putting money in rockets, there's also egos involved. Like, and I think that's another thing, that funding behind this, where you do have billionaires competing to go to space first. And it was like maybe if Zuckerberg had some other people got interested in the metaverse, maybe a similar race could have like pushed more funds to there. But basically, what I'm trying to say is when you're looking at growth, right? Growth is going to be funded through investment or through profitability, sometimes both, right? But what's fueling these rocket ships and their companies, literally, is this investment appetite. And that's why. And you can look at it and I can say, like, I don't think that's going anywhere. Like what, like, what could possibly, like, I think nothing short of like aliens coming and being like, you're not allowed to leave, right? And even then we might keep shooting some rocket ships out there until they shot them down and be like, oh, maybe we should take these aliens seriously. Try something first before we gave up. Like, I think anything short of that, like, we are going to keep launching spacecraft and money is going to keep going. And I was like trying to think of a scenario that would stop them. And I do think eventually they'd be like, okay, these aliens are serious. We're not really sending these spaces. But like, that's how ridiculous you have to get before you're like, okay, we're not going to fund spaceships anymore.
I think aliens saying you can't go in outer space would make people want to do it more. People always want to do
Yeah,
what
no,
they're
I'm
told
saying they
not to.
want to, but it's not like,
Yeah.
they're only gonna have like so many of our spaceships shot down before we're like, okay, let's focus things. Maybe we'll go in the ocean instead. Like, yeah, I think if there's one thing like you can count on humans to be, humans definitely have that like edge to them. Where like, hey, you don't tell us what to do, but also like most humans have a sufficient amount of fear where they'll also be like, okay, these guys, like it's time we respect these aliens. I think they're serious.
Mhm. So spinning to another car company I wanted to bring up today is Jaguar, their new rebrand. So Jaguar had this controversial commercial that they released about a week or so ago, and it was controversial because it didn't show any vehicles in the entire commercial. So they kind of got roasted on social media, like, "Are you still a car company?" Well, they released their first version of a new EV car. It's called Type 00. And their I think their tagline of their commercial was like, "Copy no one, it was some short thing, but it had something to do with copy no one. But this car looks a lot like a Tesla. Like it's such a simple, sleek design. I actually like the way it looks, but I wanted to bring this up to kind of talk about, is it ever a good sign when you see a company like Jaguar, which is an older company, rebranding, or does that only come about when there's some distress and they kind of need to shake things up within their business?
Before I answer this question, I forgot what my favorite like Tesla story that I've seen in the last month was. It was that apparently raccoons are breaking into Cybertrucks because they think they're trash. you can see you can see them all scratched up, which is just like that is just hilarious. I was like, oh, and like the article had like a trash like a what are they? They're not bins. They're like
Like the
whatever the things they
dumpster?
yeah, dumpsters.
Yeah.
Yeah, it had like a dumpster and a cyber truck. And I was just like, oh my god, that's and like this cyber truck that had like these scratches all over it, which is just like hilarious. Um, but on to Jaguar. Um, Rebranding is almost always some form of desperation, right? Because it's just like, oh, you should take another look at us. You probably didn't like us before, right? Like, if you're not feeling insecure about your brand, you'll just modify, right? You'll modify slowly. You'll change things. Like a rebrand comes. It's like pretty much an admission. Probably some people got fired, and you brought in new people who have like a different idea. Um, but I've never been much like since I was young. After I became an entrepreneur, I was like, oh, like these cars are like not really. These nice cars are not worth it. But maybe later on again. Uh, but what I always when I test drove and I ended up like when I was working in finance and buying like a Lexus. At that time I thought Jaguars were pretty cool and I tried it and they design has that's what's so funny about this whole rebrand. Like Jaguar design has always been pretty cool. Like, but then I got it and the car just didn't drive very well, right? So I think the funny thing in all this is they might be solving the wrong problem, right? I always thought their design was kind of cool, and I think they got a little old and that kind of thing, um, but I don't think the design was ever the problem. I always think it was like you got in and you drove the car and it didn't have the pickup or the steering of like pretty much any of the competitors. Um, and and so yeah, I think it's definitely bad for them, but unless they fired their engineering, or maybe they hired new people, and maybe they could make a better car. But I feel like that is their problem, and I'd say that perception is probably even harder to fight than brand, right? Especially at that price point. People like me that have driven, like test driven a Jaguar before and not liked it, right? That this isn't. Oh, it's like, oh, I better get behind the wheel of this like new design. Um, that to me actually exacerbates the story, right? It makes it feel like, oh, like maybe me and everybody else that didn't like these were right. They don't drive very well, and they're trying to get around that by just like slapping a new coat of paint on it. But they probably still have the same problem because maybe they wouldn't need a rebrand. Maybe these cars would start selling themselves a little bit more with word of mouth if they were actually good cars.
Something
But
I've
I think,
wondered
sorry,
Something I've wondered from time to time about my life is like, I feel like, couldn't you make a cheap car that looks like a Camaro? And what I'm saying is like, it doesn't have all the premium pieces in it, but why can't they mold a car that looks like cool but is cheap? And I'm wondering if that's because consumers would reject the idea of like a cheap car that looks like a hot rod, or if there's any other, because I don't understand how come you can't make a car that looks gorgeous just with cheap parts. Like, I don't understand that dynamic. Do you think it's that consumers wouldn't want a cheap car that looks like cool? It wouldn't be get the same like recognition from your peers, I guess, which is why you buy a nice car.
I think you're talking a little bit out of like both sides of your mouth, right? Because it's just like, how are you going to get a car that looks good, right? You have to hire like a good design team, right? you probably have like, good materials tend to be what makes it look good, right? You can't like, what would be the point of even having like a cool exterior that you pay a lot for the design for, right? And then have like cheap looking interiors, right? So the problem is if you do all that, right, you spend on a good design team, you spend on good materials or whatever, you're going to kind of have the, right, a car that looks good and is more expensive than the cheap cars, right? But drives like the cheap cars. Like, and I do think there's like some cars like you're talking about. Like, I think the Chrysler 300 is a perfect example of that. But like, I would never want it for that reason. Like, you're paying a little more for design. Like, the engine, it's got like a pretty souped up engine, but it's a lot more expensive um, than, a cheap car. So I think that there are some examples. And I mean, even if you look at like a Mustang, right? Like what it is, it looks like a pretty flashy car and the engine's pretty decent. But like when you get in, the interior is a little like uncomfortable, right? Its engine isn't as good as like a lot of the cars that like look more expensive. Um, are more expensive than it. So I think there are these variations, but yeah, I think that's what it comes down to. If you're going to be ultimately paying more for a design, you don't want to then have like a shit car to drive. I think that that's kind of the dysfunction.
No, that is a good explanation of that. I've always wondered that throughout my life. Now we have another company that's kind of trying, I don't know if you'd call this a rebrand or not, but they're definitely looking to shake things up as well in Apple. I saw this story about how they're planning to launch a foldable iPhone in the second half of 2026. So usually they put out new products like September. So probably September of 2026, there'll be a foldable iPhone for purchase. Um, its size is expected to be between 7.9 to 8.3 inches, so pretty big once it's unfolded. Do you expect that people will be interested and buy this product up? And is this the type of innovation that you've been thirsting for out of Apple?
Well, I mean, it's definitely not that, first of all, because I've actually been searching for some real innovation, and them ripping off Samsung is not exactly the kind of innovation I'm looking for. I will say it is kind of funny if it does do well and they're just basically doing does to them. Uh, and it would just be really funny if Apple's like, okay, we're not even going to pay for this anymore. We're actually just going to like beat Samsung at their own game and just start stealing whatever their newest designs are. But that is kind of like a sad state of what we're talking about, of where Apple's innovation is, right? Where like Samsung doesn't, they've like caught up and they've surpassed, and now like Apple's ripping them off. I think that's pretty sad for Apple. Um, but yeah, I mean, I think it's definitely something where uh, that's not the innovation I'm looking for. I hope I hope for their own sake that they find a way to get some real innovation sooner or later, because they're just dying a very slow death. And I mean, some people don't like when I say those kind of things, right? So dying a slow death, they're just on a very slow decline because they have so much scale that they're going to be players for like a long time. But I do think we could see a day like where they're like 3 or 4, right? Where they just keep going down. Like, and I'm not saying that with the current like landscape, right? I'm basically saying maybe there's a company that comes along that is amazing at innovation that does start doing what like Apple used to do, which is just like coming at people with ideas that didn't exist. Now, do I think there's like a high chance of that versus them just like, I'd say maybe getting to a point where their like sales are just going down, but they're still a very, very large company? No, I don't necessarily think there's a high chance. They have little things that are working for them. Like, I know I like this, just being like a blue colored text instead of a green text. They've done a really good thing with that. And like, I don't think anyone wants to be a green text. That might be the biggest thing that's keeping me with Apple right now, because I'm like a PC person, so I don't even have like the connectability that a lot of people have. But and I'm not saying I would buy a different phone, but anytime I'm thinking about it, I'm just like, no, I don't want be one of those people on the group text that's green. So they've got little things that work. I mean, the thing that I don't know that exists, something that would cause me to switch, is like the planned obsolescence BS. If a company could just like, I don't even care about all the features or whatever. If a company could just build a phone that had a battery that like lasted for a long time, and I wasn't like, okay, in a couple years, like this battery is going to drain in like half a day, right? If I could have something like that, that would be something I'd be very interested in.
Yeah, I think you're nailing it on the head with the what Apple offers. It's like being a part of their community. Like once you get one Apple product, you get another Apple product, they work so well together, and then with all the people around you, it just connects so nicely. But I think how we're talking about Apple, I'm wondering if they need to pull the same move that Intel just pulled, and how you'd feel about that if Apple got a new CEO. So what happened at Intel was Pat Gelsinger, who's been the CEO for some time now, announced his immediate retirement from the company, but it seems like he was pushed out by the board after Intel has struggled mightily, while other semiconductor companies have far surpassed them in the meantime. So two parts to this story. First, since we're talking about Apple, do you think that'd be a good move, and do you think it's needed for them? And do you think this will work for Intel, and they can kind of compete at a higher level, become more innovative, and all those things?
Um, I don't think I'm not sure it would work for Apple, just because like while Tim Cook isn't Steve Jobs, he's a good in terms of like I think he's very well respected both at the company and um just in the broader markets, right? I think one of the worst things that could happen for Apple is they could pick a CEO that the markets weren't confident in. That could really like spiral them down, in my opinion, and make them, try to react in different ways. And like, it's a very good question, right? Like, because Tim Cook was kind of a disciple of Jobs, right? And if Tim Cook is around for maybe like 5, 10 more years, who like is the next person that they're going to be a Jobs disciple? Like, I don't know. Like, maybe they are like directly, but I don't think they'll have worked like directly with Steve Jobs. And that's the kind of thing that I don't think the market cares that much about. If it's another respected person, and they might need to hire outside, right? Right. But it is a very like it is a very, very good question in terms of like who the successor is. And I think they absolutely, as much as I rag on Apple, like they could do worse. They're under a very stable leadership structure. And by the way, the biggest thing I'm saying there in terms of stability is stock price, right? And so when you look at Intel, I mean, honestly, I didn't even know the CEO of Intel's name, but I've insulted the management team of Intel at various times on this stream. And it's kind of broad. And I insulted them because I'm kind of just like, it's kind of the opposite of what I'm talking about with Tim Cook. Well, maybe not the opposite because he's kind of stable, but the stock price of Intel has done so poorly, right? And that's your job as a public company CEO to like make the stock. The biggest thing is that, and that probably made it very clear that they needed to make the move, is that even though they got this government funding, right, they still did badly afterwards. And that's terrible, right? You shouldn't have to be like handed money by the government and your stock price still like is faltering. That's like, that is really, really a bad reflection of the management team. And it goes deeper than that, right? It's just like they were NVIDIA for all intents and purposes. And they were kind of better than NVIDIA because they had this partnership with Microsoft, them in every, PC. Later on, that changed as they started to like lose their luster. But right, for a while, it was just like Intel Inside. That was a little sticker. And so, you know, basically what we're talking about there is they had a lot to lose and problem with management team. But the nice thing about following a CEO that's done a bad job, right, is there's a lot of room up for whoever gets the job next, right? And unfortunately, like it's so funny. I mean, but it's interesting that new management always gets this, reputation. A new CEO's got to come in. They'd be idiots not to do an outside CEO because I always say management team. I haven't singled out the CEO because for a company to take a dive like Intel did and not even be able to uh, like create a good story around getting government funds, right? And stock price appreciation from that, you're in real bad shape, right? And that goes far beyond the CEO. Although it is probably the CEO that's creating like a culture of mediocrity at best at that place, right? So make an outside hire. You try to get like I'm sure they could poach someone, very good from Nvidia, for example. That's who I'd look. I'd try to look for like a high achieving, like engineering leaning like person. Maybe even knows a little bit about their R&D uh, and bring them in, right? That would be the smart thing. And I think NVIDIA is like the brand. Again, like some of these are like idiot tests and like not bringing in someone from NVIDIA, the clear leader. They're the ones who like ate your lunch and dinner. Um, that's what like smart companies, smart boards do. And then that person, like, there's a clear playbook for how to fix that. You fire a bunch of people at Intel, you start hiring, and it's just like a very clear roadmap. Just give people a level down, promotions into this new company. And like that is the roadmap for fixing a company when you become a laggard. You go to you poach someone from the leader and you drain talent from the leader. Now, a lot of these places have non-competes and things like that, but you know, there's ways to get around that. A lot of people just like, they'll just quit their jobs and, take a sabbatical. And then all of a sudden there's a nice offer from Intel waiting for them, 6 months, 1 year after. Now, one thing I'll say about that, it does seem like NVIDIA's culture is so good that you'd be like, why the hell would I leave? But that's not true for a CEO. Anyone that's like an SVP, EVP, someone like super senior in NVIDIA, the chance to like move up to CEO, you don't necessarily get that chance all the time. Um, when someone's coming, like when a big brand, they might have fallen from grace a little bit, comes knocking on your door, right? Like even look at um, the Chipotle guy that left for Starbucks, right? That's a perfect example. I think they were like similar in market cap. And it made the jump, and since then they've diverged. But like, Starbucks is a former like, giant mega leader, and Chipotle is someone that they like carry. So that's the perfect example of like, there's certain brands that provide the opportunity, chance to be in, and in that case, he was in charge already, and it was a slight jump, right? Um, and then this one is going to be more of a plummet down, but yeah, and a lot of the times, if you can offer someone that kind of job, there's a clear playbook. Now you'll know Intel is a problem if they promote from within, right? That's them not understanding what their problem is, or if they make some obscure hire. Um,
So that's very interesting because it seems like we're going to know the fate of Intel based off who they hire for their CEO almost immediately, and whether uh, there'll be an interesting stock going forward from there. And yeah, you mentioned Brian Nickel. I was going to bring him up too because that was what I was thinking of, how well that announcement did for Starbucks the day that was announced. So it'll be exciting if they announce someone from Nvidia. Uh, we'll have to watch that stock and see. And I feel like this type of storyline is something that the Prospero signals could nail, because someone somewhere might know who they're going to hire as CEO before they do, and then we'll see the signal. So We'll watch Intel in our app going forward. So we covered Black Friday before it happened, and we were wondering how the numbers were going to come back this year. So total Black Friday spending was $10.8 billion, up 10% from last year. Between the hours of 10 a.m. to 2 p.m., online shoppers spent $11.3 million per minute. I was at the mall, and it was a madhouse. It took me actually 15 minutes to park at the mall I went to, which was Garden State Plaza, if anybody's in New Jersey, New York area. Um, do these numbers give you confidence in the consumer? 10% higher seems like it grew more than even inflation or anything. So people are out there spending for these holiday season. How do you feel about the numbers we got back?
Well, I think I said before that like we can reliably expect that they go up because they keep doing it. But I don't know. You're kind of the people that are in it. I kind of have a question for you, which is like, why do that, right? Like, wow, it's why like to save like an extra like 10 or 20%. That just feels like a horrible experience.
Well, I'm a bit of an oddity. I didn't actually buy anything. I just went to the mall with like my friends just to feel the energy of the mall because I knew it was going to be like chaos, and it was. So it was fun. I don't know. Sometimes when you're at the mall and it's packed, I feel like it's just a fun experience. All I bought was lunch. That's it.
All you bought was what? Lunch. Oh,
Lunch. Yeah.
yeah. No, I mean, I think it's I think that that kind of helps explain, what I was going to say on a broader term, which I think like a lot of people have bought into the phenomenon, and like it's become like like what are your Black Friday deals? What are you, like, so I think that uh I think that like, Amazon and I mean I don't know who started it, but let's just call them the retail powers that be have like have like gotten into this really good zone where uh people are actually doing just as much of the marketing for them as they have to, right? I do think it was pretty funny that Amazon had like a Black Friday football game. Like, okay, they're really like going all out to make sure of this. But no, I think that it's just like um it's become such a thing. I even remember like my older sister who's very thrifty and was like just like sitting down even though we were all on her phone on Black Friday and talking to her husband about Christmas presents. So, yeah, I think it's definitely become like uh just like so big of a thing everybody's minds, and I do expect it to keep increasing because like that's what it's kind of like when something gets momentum. Like I compare it to something like Game of Thrones, right? Where it's just like once enough people are just like talking about it, like it just keeps on. It's just like this thing that keeps on and gaining momentum because people want to be in on that conversation. They want to be in on like, what did you get for Black Friday? And like another phenomenon I can compare it to is like when I was going like more music festivals when I was younger. Like a lot of people that were into that like wanted to like bring other people music, right? Like, oh, I just caught this new song, new DJ, blah blah blah, right? And I think that like it's the same with a Black Friday deal now too. You have a little bit about that. Like if you've got a good deal, you can like bring it to people and you can like look cool in front of your friends. Um, so yeah, I think we can expecting it to keep increasing because like that would be an interesting thing to know like if advertisers are spending more dollars or if they're spending a similar amount of dollars and getting similar result way it would be part of the same phenomenon where like once something's growing and has momentum you do have incentive to spend more because you have expectation that it'll return more, right? It's kind of different sides of the same coin. um but no, I think we've become like a very like an increasingly consumer oriented society. And I mean, look at all the consumer debt we still have, right? And people are spending. It's like people are just like essentially being like, I don't care if I'm in debt, I'm going to keep spending, right? I
Mm-hmm.
think that's when you look at the debt and you see that, that's what you feel. And it's just like, I think a lot of people at this point just, I don't know, they just like, I think they're just committed to the consumerism, and they're just like, whatever.
I think what you're hitting on with the like talking about the momentum of it is it's gone beyond just like marketing, and now it's like the culture. Like it's such a part of people's lives that I think they could do almost zero marketing, and there still be $10 billion worth of Black Friday deals. So yeah, maybe that's when
Yeah.
you won, when you're a
It's a
part of the
thing.
culture. Hmm.
Yeah.
But there are some retail stores who are not benefiting from this consumerism. So dollar stores are still struggling. Both Dollar Tree and Dollar General have cut their sales outlooks for next year. Both stocks are down over 40% this year. So are these companies soon to be things of the past? How could they? I mean, I'm assuming that they sell things for more than a dollar. They're not actually true dollar stores anymore. But in 5, 10, 20 years, how could they even like claim to be dollar stores or have it in the name? Are they going to have to change something or just go away completely?
Yeah, I mean, I think this is kind of what we were talking about in like, Walmart and Target, or even a different thing like Chipotle doing well, and while cheaper options struggle. It's like I think people are becoming, and I think what's ruining dollar stores is like something like Temu, right? Where it's like Temu, where it's, and I guess like Amazon's gonna have a competitor where it's just like, I think the biggest thing that ruins it are, you want the reviews, right? If it's cheap, like, I don't like, especially these days, I don't want to just pick it up off a shelf, right? I want to know what other people have said, especially if I'm buying something cheap. And I think that's ultimately like what kills it. And I think it's the same thing that kills Best Buy, right? I think food is in a different category because you know what you're getting. Like, you don't have to like read the reviews to Chipotle, right? But at the same time, the reviews exist that people like Chipotle is good, right? Um, and I think, you know, it's the same thing with Best Buy, right? Why would you even go in and buy something? We talk about like, especially these one day deliveries that are kind of like changing the game on that. Um, but yeah, I definitely think that it's a totally different thing, where it's just like, why would you buy something cheap now when these reviews exist, and other cheap things? And I really do like the fact that it's happening now, tell the rise of these cheaper goods. Like Amazon was like good. It wasn't necessarily cheap, and the things weren't necessarily like easy to find. It was cheaper, but it was mimicking a lot of the same goods. Um, but I think now there's a lot of places, and like I think the dollar store is kind of like, you pop in and you're just like, oh, like this. And I think Timu is mimicking that experience, right? You pop in, you see what's there, you kind of like window shop, right? And you can do that online, and that wasn't what Amazon really was before. And I think that's where the dollar stores were probably doing well. But now, when you can kind of window shop, get the reviews, like,
Yeah, that makes a lot of sense. Curious to see how these companies are able to either die slowly or die quickly. It seems like one way or another, that's the way it's going. There was an update on a story we talked about, I believe, a few months ago. There's a new national exchange called 24X, which is looking to be, the longest open stock exchange. Until this update, they were planning to be open 4 a.m. to 7 p.m. on weekdays. Now they're looking to push it to from 8 p.m. Sunday through 7 p.m. Friday, with only 1 hour pauses each day. So we have a lot of people in the stream today. Welcome, everyone. If anybody hasn't heard you talk about the extended hours and what that does for retail, I think now would be a good time to talk about this and this 24-hour exchange.
yes. And I will be talking about it again at the Finamize thing today. But basically, yeah, the big thing that I think is important for people to remember is that, like, right now there's tools that are equalizing tools in terms of like the gap between retail and institutions, like Prospero, right? And we're doing a lot to, make things more transparent in terms of where institutions are betting in real time, right? And then you have tools that are widening the gap, like payment for order flow, like Robinhood, these 24-hour things. And I'll tell you why they're widening the gap, right? If you think about these 24-hour markets, like what we really focus on are options markets. And as best as I know, those are not changing. Those are keeping the same hours. So these markets that are operating outside of traditional markets, outside of traditional derivatives markets, it goes to institutions because they have much better pricing algorithms of knowing not only what the true price is, but when you throw in things like payment for order flow, you are actually allowing them to manipulate the price overnight in between market hours where there's going to be like a lot more liquidity and a lot more fair and accurate pricing, right? That's not what you're getting when you go to a broker that's outside of the wider market, right? So I think that that is a really big thing. And then there's also just like, you have to sleep. People have to sleep. Robots do not, right? So you give them to operate and get information. Like one of the things that I always say, and technical traders know this more than anyone, when by like watching charts, the less your human brain is taking in market information, the more you're falling behind, right? And that's even during a day when you have a job or you have other things you're focusing on hitting you. When you're talking about throwing in them being able to gather data on how markets are behaving while you're sleeping, as well as control pricing and trade outside derivatives, probably creating their own derivatives that you can't even see overnight, you are pushing the market more in their favor. You're signing up for that. Do not use these tools. You are giving institutions larger advantage, and you are quite frankly a hypocrite if you're trading in night markets and you say you want the markets to be better or more fair. You're part of the problem if you're doing that. I'm sorry.
So you speak so against this, and I think rightfully, but it seems like this is the direction the market is heading. I guess that's because the people with the power and the money want it, like you're saying.
Yeah,
Uh,
that's why. That's the way the market's because it benefits them more, right?
yeah.
So they're going to do that. And if you look at it this way, right, it's a cat and mouse game. Like Prospero that are helping people catch up to institutions, right? So what are they going to do? Create new advantages for themselves. And people are just like signing up for them, signing up for like, and that's what's frustrating for me because I've worked hard to create a tool that helps people catch up. And then you have all these new running into Robinhood's, Weeble's 24-hour markets that's again creating advantageous situations for institutions. And that sucks.
Yeah, well, I'm happy that we spread this message because I don't see it being talked about anywhere else, I guess, because they want people like retail investors to adopt this stuff. So hopefully, as we talk about it and get, bigger and bigger voice, people hear our message. And we got a lot of people in here today. So hopefully, tell your friends and family and people who are trading involved in the market that this stuff is not good for their investing future. Um, Another area of the market, similar to like how we discussed about the space stocks earlier, that's been very momentum driven recently, has been the nuclear energy sector. And we just got an update from GE Vernova, which is a $90 billion company, and it was a spinoff from General Electric, their energy business, about how they are planning to invest in the small nuclear reactor business. They want to build them all across the world. But one thing that they mentioned, which I was curious to get your opinion on, is that this $90 billion company that spun off from General Electric, so they have all the connections in the world, is expecting to get 2 billion in annual revenue by mid 2030s from this. So if this company gives that kind of prediction on a 10-year timeline, that makes me a little bit worried about the value proposition that some of these smaller momentum driven names like Oklo and other ones that we've discussed, how quickly they can meet expectations, and if this is just momentum and these things are going to be very rocky, or if they can actually deliver quickly on what the market's excitement about nuclear energy is.
Well, I think this is back to the conversation we were having earlier, right? Is it like investment or profit businesses, right? And if you're talking about nuclear energy, you're talking about a long tail, right? But what you see in nuclear energy, right, is the same thing we were kind of talking about in reference to space. It's like there is this big demand there, right? There's this demand that say, hey, everybody compute, right, says compute is going to grow at a speed where we do not have enough. And one of the challenges is powering that compute, right? So solutions that have the power, right, are going to be needed. So and that's what you always look for, right? So even if there's like a longer tail to that, it's going to exist. And right, and like one of the things that you have to look at when you look at that kind of thing is like, yeah, maybe GE doesn't necessarily see the market, right? Yet, or can't forecast it. But if you look at Oklo, like you got to bet dollars to donuts that by the time they're ready to start building, right, they're going to have a customer in Microsoft, right? They're going to have a customer in like OpenAI if they're building their own, right? That's why things are betting on these companies, because like there's two components, right? And we're talking about it a lot today. Like there's like, is the technology there, right? And then what's the demand for the technology, right? And if there's enough demand, you can be patient with the growth of companies into profitability. It's only get concerned when they don't necessarily see that clear demand and there's a longer timeline to profitability.
So I guess if I'm understanding, it's like as long as there's a light at the end of the tunnel, as long as people believe that one day it will come to fruition, whatever they're imagining, whatever the excitement is, as long as that is clearly, people believe in it 100%, these stocks are worth looking at. And it's only
Well,
when
I
that,
think more specifically, what I'm talking about is like, I don't want to say unlimited, but like you want to see like immense demand, right? Like the two things we've talked about that today, like space. If you talk about like space exploration, space tourism, maybe you would put exploration and kind of like scientific or mining mission, there's like so many, like looking at that demand, the limits are high for that, right? And similarly here, we're literally talking about like, we don't even know how much power we're going to need. Like with Moore's law and like, chips getting faster and faster, like we don't even know the extent that we will need more power, right? So when you like that, it starts to make a lot more sense when you're talking about like why people are interested in this. Because it's one thing to be like, yeah, there's going to be some demand, but it's another thing to be like, there's going to be an insane amount of this product, like on a longer time scale.
so I just wanted to check in on AMC because we're about to get into our last topic of the day, and it has to do with the box office. And I noticed we were getting a lot of comments over the holiday weekend about AMC stock, but it is down 4% today, so not looking too great today. Although GME and AMC over the past like few weeks, they've got kind of caught in this little meme stock bid. But what I wanted to bring up was that the box office had a record-setting 5-day holiday weekend where it earned over $420 million. Three movies played the role in that was Moana 2, Wicked, and Gladiator 2. And I know we brought up Cinemark a few weeks ago, looked good in our signals, and I believe we added it. So how are you feeling about the current state of the box office? Does this record-setting weekend give you some confidence? Are you going to, become an AMC ape today, or no?
I don't know. Maybe I don't want to make any new enemies today. I mean, look, the box office is looking good. I still was sick, one of the things we bought Cinemark this weekend, and I was like, I didn't see myself doing it. I also didn't see it being, one of the higher ranked scores in our screener this weekend. And I think that shows, kind of what we always say, that we're very signal driven. As much as I don't really like movie theaters longer term, there's always like a shorter term play. And I do say, I'm not necessarily planning to hang on to it for very long, but like it's always good to be opportunistic with short term plays. And it did very well in our signals. We've done, well with it during the week. God, AMC again. I mean, the one problem is like AMC is still very low profits, or very or close to not profitable. But being diluted like over 90%, the important thing that someone has to realize is like when they're just like, oh, the box market, the box office will recover. Like it hasn't to the numbers pre-pandemic, right? And even those numbers, right, they were not they were not with this much dilution, right? They have to be so much more profitable with the amount that they've diluted to have the same earnings per pandemic, right? They're in selective default, an SD credit rating, right? And they do have all this debt, and with their earning level, they don't really have a way to pay it back. And it's just like, Cinemark already went through a restructure, right? And they're looking better on the right. And AMC is like that. Like some people just, that's the problem with this analysis. They believe what they believe, and they don't want to hear that AMC is just not, their capital structure is just not set up well. It could be a business that makes some small profits, right? But they need to cut some fat, all the dilution. They need to like recapitalize. They need to reorganize. But it's very frustrating to see so many retail investors like chasing down AMC in an age when there's going to be so much growth in so many stocks. And it's just like, maybe you think it's going to go up, but maybe if you've held AMC for years, you want to look at the last, years of your life and look at how Prospero's portfolio is done, and maybe ask yourself if that's time well spent, because you could have made all that money even if you think today AMC is going to go up 4,000% or whatever. Well, the last few years you could have been making money and then just like caught up to it here, right? And that's the same thing. Some people have caught on and be like, oh, you should have done SoundHound, blah, blah, blah. It's like, well, like my portfolio has done, like when I said that, SoundHound is like $10 now. It was at $7 when I was like, there's other better investments, right? And there were other recently that it's been going back up, right? Some people just don't understand that. Like we like to invest in things that there's appreciation, but much bigger than appreciation, there's higher floors to these investments. There's lower risks, and we get upside at lower risk levels. That's very different than investing. And I like, some people will never get that, but hopefully our viewers do.
Yeah, the time value of money is something that I think a lot of people who are commenting on stuff like that don't understand. And in the SoundHound video, I was going to bring that up. In like the first 5 seconds, you say people who bought SoundHound as it's approaching $10 are going to be stuck for a bit. And I look today, it's at $9. So they basically have done nothing. And that video was February, so it's like 9 months later. And you have stock like Apple,
Yeah,
even, which
we
Prospero
had our
loves.
best year, right? Yeah, like I don't like. It's like I didn't even know that video said that. Makes it even more mind-numbing that people like come to like. I mean, how long have they been waiting to come to that, back to that video? I'm sure they've been waiting, like just sitting there and be like, I'm gonna tell this guy, like, and it's just like, and they were so like, yeah, they were so intent on telling me off that they don't even realize that like what I said was accurate.
I also think some people, they just like don't care about what the video actually says. Like maybe there's someone who bought SoundHound like 4 months later when it was $3 and now it's 9. So they made a good trade, but it's like, well, that's not really the context of the video. Like you kind of missed the point. But anyway, you know, people online all have their own opinions. That is the end of the topics for the stream today. I'm disappointed we're not going to be in the Prospero.ai laboratory, but we are still going to do the model portfolio update.
Yeah, we're just the laboratory is here. We're in the lab.
It's mobile.
Let me get everything set up. I'm happy. I thought this was not gonna cooperate, but it did.
Yeah, and we had a good viewership today. Um, I'm wondering, in London, do people like, is there a London stock market, and do people pay more attention to the USA one, or is it like the European one, or is it like 50-50?
Yes, it's called the London Stock Exchange. Um, I think it probably depends on who you talk to. I mean, I think the here are going to be focused a lot more on the London one, but like that's not necessarily like everyone. And then um, I also just think uh, retail investors, they tend to like the American Stock Exchange a lot more, right? There's some professionals that are going to do both. Um, what's QQQ and SPY net option sentiment?
All right. So QQQ. QQQ is at 46 and SPY is at 40. So industrials are taking a bit of a hit in the last week. We'll definitely look at divesting from those bull picks and target some bears, and the reverse on communications, which is looking strong.
Didn't realize comms was doing so well. Oh, we should go up here. Ugh, I hate not being in the Prospero lab. Can't see anything.
Looks like value stocks and all caps are facing a bit of a slump. We do tend to lean more growth, so we are already well allocated there. Large cap growth, especially, is on a 1 week run, so we maybe will lean a little harder into our traditional names.
Damn, we're in December. Hit the trade desk, so that works out nicely. Don't have to change the highlight. Oh, I do need one more. I forget what it was. I think it was, oh yeah, it was Datadog, which did not end up doing well. That was the biggest I've ever seen. Okay, we already got that one. What is this? That's looking good. I've really been screwed on this before. Oops. Get rid of some of these.
D. Curtin is asking why you highlight some of the tickers.
Those are the ones I'm adding. Easy enough.
So D. Curtin, like the top half are the stocks that look the best in the momentum score, and the bottom half are the worst, like the green and red color code. And then if they're highlighted, the same green or red color, those are the ones that we're either adding either long or short.
Do I already have a PLD position open here? Let's. I do. I thought I don't think I want any energy exposure. Well, maybe I do. Why isn't it?
Okay, so his question was, why are you picking the specific ones? Is it based off sector, since like the scores are similar?
A little bit is based off sector, but I'm just basically looking at the average upside. Like, because some of these you see like up here, these are just low. And I'm just easily eliminating them. Sometimes I'll look at this as a tiebreaker, the technical flow, but I'm just trying to take ones that have higher upside. You can see right this. Oh. It's lower than I thought. I'm still going to keep it because I'm stubborn. No, because it's still pretty good. Wow, PTCT has completely turned around. I think I'm biased against it. Maybe I'll add it. That's kind of funny. You know what? It's a former bear. I kind of have a soft spot for it. It's turned its life around,
That's an interesting point. Is there a stock that comes to your mind that like like ridden the roller coaster of Bull and Bear like multiple times, or no?
No, I mean it's rare for it to really make a transition, and honestly, kind of like with SMCI, I'm just like uh, I there's like I don't trust them as much. I should. Like this isn't necessarily the best instincts, but I'm just like I think with it's just like personal. I had such nice times with SMCI. I don't want to turn around and turn my back on it.
I completely understand that.
It's really not sound investment principles though. It's really not what I ooh.
It's when a fantasy football player burns me, I'll never draft them again,
Yeah,
no
so
matter what.
add some communications ones as well. We got to balance this out a little bit. How's the real estate sector doing? Okay, we want to do this, and then we're also going to add the top communications. What is T?
I think that's AT&T.
Gross. Jenny. All right, we're in. Goog and Jenny, we're going to add. Leave me alone. Yeah, it's going to be pretty bad. See, when we're not in the Prospero lab, it gets painful. Oh, that's funny. I exited Jenny yesterday. Oh, well. Back in. We're not ready to get into that yet. All right, unless we have other questions, that is it.
No other questions. D. Curtin says thank you. That was the explanation I was looking for, but nothing else. Everybody, just a last reminder, George will be live 2:15 Eastern time. So the links are shared across our social media. So tune in for that. Good luck, George. Can't wait to hear what you say live at the Finimize conference.
Thank you. All right, bye-bye.
Bye. Thanks, everybody, for stopping by.